Finovate showcases cutting-edge banking and financial technology through a global conference series featuring short-form demos and thought leadership. Now, the conversation continues on the Finovate podcast.
Hi, everybody, and welcome to the Finovate podcast. We've got a fun one for you today. I'm chatting with Kamran Ansari, a longtime venture capitalist and operator who now invests with his own vehicle at Kapital Ventures and also acts as a venture partner at Headline. Kamran, thank you so much for joining me today.
Awesome. Thank you for having me.
So I think the first thing we'll have to ask you to do is introduce yourself. Since you have a couple of different roles, can you talk about your background and how you find yourself where you are now?
Sure. Happy to. I've been in the tech space about 20 years, both as an investor and operator. I've been fortunate to have two or three operating roles, starting with a company called When way back when, software business, and then my Yearbook, which is a social media company. And then most recently, I was at Pinterest in San Francisco running corporate development and strategy. So those have been invaluable to me in my investing career. But in the venture side, I really spent my time in two sectors, primarily fintech and then commerce and e-commerce enablement. So those have been the spaces I've invested in, and was fortunate again to be involved with companies like Venmo and Braintree earlier in my career, which kind of jump-started investing in the financial technology area. And it's gone on from there. I spent many years at Greycroft, and then more recently invest seed and pre-seed stage out of my own bucket called Kapital Ventures, and then anything kind of Series A or B or later, do in collaboration with Headline, which is a multi-stage multinational venture fund based in San Francisco as well as Europe and other jurisdictions. And I've worked with those guys for a long time, and they're terrific. So been working with them on fintech deals the last couple of years.
So fair to say you've got a pretty good amount of experience in the sector from multiple different sides. And I think what we're going to talk about today is going to be kind of really a broader scope of where the fintech industry is at the moment. Before we get there, though, I want to talk a little bit more about the types of investments that you typically like to make, both with Kapital and with Headline. Can you talk about what, are there specific stages? Well, you mentioned a couple of stages. Are there specific subject areas that you also typically look for that are kind of your sweet spot?
Sure. Well, within fintech, I sort of think of fintech as having four kind of large pillars, starting with payments, and then asset management, which includes everything like wealth and tech and stock trading and all that, lending, and then the fourth being insurance and insurtech. And I've been able to invest across all four of those areas. I think payments is still, by and large, the most kind of heavily invested, most successful, largest sector among them in terms of innovation. And it's just, if you look at the public markets, the largest fintech companies that exist, including PayPal and Square, and if in some ways you consider kind of a MasterCard or Visa to be, a fintech business, these are all payments companies. So that's been kind of the forefront, I would say, of investing, but the other three sectors have also had notable outcomes. And I tend to invest early. So again, seed and pre-seed, it could be early as kind of ideation and slide deck on that side. And then for Headline, the team tends to like to see kind of post-product market fit traction. So that tends to be kind of 6-12 months of data after a product has been launched and there's evidence that it's working. So that's sort of the two lenses that I apply.
Sure. No, I think that makes sense. Are there any portfolio companies that you'd like to brag about a little bit? Anybody? And well, you mentioned Venmo, but and Braintree. Are there others that are you're currently working with who you think are onto something special?
Absolutely. I mean, look, how much time do you have?
Right. Yeah.
VC's favorite question is what portfolio companies you want to brag about. On the Headline side, we've done a couple of deals in the last 6-12 months. One is called Helsum. It's a payment processing business based in Canada, but primarily U.S. clients, and really focuses on the kind of professional services and healthcare verticals. So that's been an exciting company at kind of that Series A, B stage. And then another one called Closing Lock, which is a business that, again, as I mentioned, payments is kind of the fattest part of the stack. They do payments and secure payments, particularly around real estate transaction closing, hence the name Closing Lock, which is obviously a big, lumpy amount of money that's going back and forth. You want to make sure that that's highly secured. So that's Closing Lock. So those are very interesting at the later stage. Other companies I'm involved with right now that I'm really excited about, Coast, which is a B2B payments company focused on trucking and fleet, and then a number of infrastructure companies, including Lithic and Unit and Orem, all of which do different pieces of kind of the B2B infrastructure stack for fintech companies.
Yeah, really cool. And quite a bit of diversity there as well, which is great to see. So I'd like to switch gears now and talk kind of more broadly about the fintech ecosystem and your view of where it's at. And I think one of the things that I hear a lot that's kind of a common topic is, eventually all tech will become fintech. This idea that, every tech player will eventually touch finance in some way and can therefore be thought of fintech. I think that's overstated, but it's also clear that a lot of traditional tech players are making forays into the fintech space. And at the same time, fintech innovators are making sure their products are able to be accessed in other areas, embedded into other aspects of technology. What's your take here? Is all tech going to become fintech eventually?
Well, I mean, fintech is a super category. It's not a niche kind of space. It's a monster portion of global GDP if you think of just financial services as a bucket. And all fintech is essentially taking all the traditional financial services functions, which I mentioned, like payments, lending, asset management, insurance, and digitizing and modernizing those. And we're still, in many ways, in the early innings of that process. If you consider just the overall size and breadth of the financial services market, you may think of fintech. These are. It's been going on for a long time, or it's massive. I mean, I remember when I started investing when we were doing the Venmo deal, there was not even a phrase fintech. Fintech as an expression has existed for maybe 8, 9, 10 years. Back then, we just called it payments or whatever else it was called. So I think it's still relatively early days, and I do I don't know if I agree that every company would be a fintech company. That might be a little extreme, but certainly if you think about every company that operates, for profit, at a minimum, they have to probably accept and be able to receive and make payments. So, could you see some aspect of every business, including a digital function for being able to accept and make payments? Sure. So there will be, I think, a fintech component to a lot of companies, no matter what.
Yeah, I think I agree with that. And certainly one of the things that's come up as we run the Finovate Awards, and we've seen some of the creative ways that fintechs are working with other industries to make payments process simpler, make, booking process simpler. For example, going to a salon and scheduling a haircut and paying for that haircut. These are things which you wouldn't consider that to be a fintech solution. And yet there's a healthy fintech component when it comes to making that process easier. So I think there's to your point, there's quite a bit of room still for people to take these processes further. And I think, we are still in the early innings. And so it'll be really engaging to see what comes of all of this activity. Now, one question that we were talking about before we actually push record here is, maybe if you look at that trend, do you get to a point where there are too many fintech companies? Are we at that point now where there are too many fintech companies, either more broadly or in specific subcategories of fintech? What's your take there?
Well, I mean, so to back up a second, also on the market size, I think there was a BCG study that they put out this year, and they refresh it. And global financial services revenue annually is something like $2.5 trillion. It's enormous, to say the least. Global quote unquote fintech revenue, like if you take all the fintech companies of scale and add them all up and do it's maybe 250 billion, something like 300 billion of revenue. So it's still just 1 to 2% fraction of the global financial services market. So there's a lot of headroom. So there's no question that there's opportunity for technology to disrupt financial services much further. Now, I think the issue is around whether there's kind of a glut of fintech companies, is that there are certain subsectors that are very popular. And all of a sudden you'll find maybe 3, 4, 5, 7 companies, all with funding, all with strong teams, chasing very similar markets. And I think the environment that we were in from 2020 to 2022 really enabled a lot of these companies to get additional funding and have big stockpiles of cash that are still very much in place that will continue to last for them. And yes, I do think I look at some sectors and I wonder, hey, look, are there too many companies in this space because they're chasing the same clients, trying to hire the same people, spending the same marketing budgets to try to kind of get the same message out there, and then they're trying to differentiate, on kind of micro features. But in some ways, in order for any of them to get scale, there may have to be either a kind of a washing out where a few companies either can't raise the next round or start to kind of fade away. Or second, what I think should happen is in several cases, consolidation where, 2 or 3 smaller companies may be able to get together or join forces with a larger platform to kind of then really propel forward.
Yeah, I think certainly there are more entrants in this space than there can be winners. And this is something which is not new to fintech, although right now it does seem like there's quite a few new companies coming in, which I think is really positive overall for the industry. But I do see your point. I think the question that I have is, do you need to have this many entrants in this space in order to have the ones who actually rise to the top be as successful as they can be? And you maybe put another way, if we're going to take let's say there's room for 10 companies that can excel in a specific area, and that's just an arbitrary number that I pulled out. Wouldn't those 10 companies be stronger if they were chosen from a pool of 100 as opposed to a pool of 20? Doesn't that sort of necessarily mean that you have to be at a really high level before you can rise to the top?
Absolutely. I think that's absolutely valid. I think in most cases, whether it's capitalism, Darwinism, you want as many applicants as possible to kind of select the best and the brightest. It's why the larger high schools tend to have better sports teams, right?
Yeah, sure.
It's a numbers game. But when it comes to a space as, in some ways as specialized and regulated and potentially ridden with opportunities for losses and fraud as most fintech companies are, each company that gets added to the mix is adding banking licenses, regulatory scrutiny, money transfer licenses, things that have to be approved by the government and updated and kept in check. Each employee needs to be put under compliance checks. All these companies need a substantial amount of capital to get from 0 to 1. Again, running a fintech is not like setting up a Shopify store tonight, and you and I can start selling Greg's t-shirts tomorrow morning. I can't set up a payments business tomorrow morning. Like, it's going to take 6-12 months to get the banking licenses, all the approvals, and so forth. So given that, it does seem to me, and I'll give you some examples of the subsectors. I think it's at a subsector level. It's not that there are too many payments companies or too many lending companies. It's like there are probably too many companies doing card issuance. There are probably too many companies doing digital payroll. There are probably too many companies doing remote workforce employer of record management. Like in each of those spaces, I can name 3, 4, 5, 6 companies, all with substantial funding. And you just look and you're like, well, they're in some ways slowing each other down because they're, again, going after the same clients. They're banging each other in the head for similar messaging in the market. And I think at a certain point, you're going to see some either consolidation or some folks kind of fading away.
Yeah, I think that's a really good observation. I do, by the way, have to say that I have quite a few good T-shirt ideas. I don't know how you picked that one, but I think that is a company that I feel like I could start right now. Let's sell some T-shirts.
Yeah, we by the end of this podcast, we're going to set it up.
Yeah, we can do it. That's true. You can do it right now. No oversight. Yeah. Really, not much in the way of pre-work needed. But the point about fintech requiring a lot of those additional resources is absolutely valid. As is the point about certain companies slowing each other down. The question, of course, then they would all say, okay, well, you get out of the way. I'm doing the right thing, so you should step aside so that I can go forward. And so this is where this kind of healthy competition, I think, is key. But what we've seen, the companies that have gone on to really dominate their industry and kind of risen to that unicorn status are the companies that have been able to kind of plow through sometimes a very crowded field to come out on top. In some cases, they have their complete open water. They're the only ones doing something, and congratulations if you're able to find that niche. But otherwise, it is this kind of battle-tested nature that has allowed some of these companies to really rise up. I think we could talk about this for quite a while, but I do want to look ahead towards 2025 and just get your perspective on, what do you think the funding environment will look like next year? As we said, we've seen some early stage companies coming in. From our perspective at Finovate, it seems like more investments are being made. What do you think will happen next year? What's your guess?
So, we're essentially at this point coming up on November here. So you really have kind of 8-9 weeks left in 2024. So next year is in some ways already here. So the deals that we're seeing now, starting a fundraise process or kicking off a fundraise in the coming weeks, those will effectively be January, February 2025 closes. So I do think that compared to, for example, a year ago this time, or certainly to 18 months ago, we are seeing a higher level of deal activity on the venture side, for sure, at the early stage, and in the fintech market. In particular, at Series A and Series B, the seed market, seed and pre-seed never really slowed down much, to be honest with you. That even, I would say late 22, early 23, when things were quiet for the later stages, seed and pre-seed deals were still getting done. And you mentioned, for example, at the Finovate conference, you saw a ton of companies that were sort of coming in there for the first time. Those are all the guys that raised seed rounds in 22, 23, early 24. And so that market, I think, has stayed robust. I think where you saw the slowdown and we're now seeing pickup again is at Series A and B, and then the growth rounds, those late stage private rounds, which for the last year, 18 months, those have been really, really quiet. But we're starting to see a pickup in those. And I think you saw a big one this week. A company called Zip raised $190 million, which is a tremendous raise. Stripe itself has raised a couple of kind of later stage rounds in the last year. So those are coming back, which again, that's going to be the big shift that you'll see going into 2025 is I think the more Series A's and B's and growth rounds will pick up.
Yeah. Well, I think that'll be good for the industry as well. And, I think it's a really astute connection to put it together. I hadn't really thought of it in that context, but the startups that we saw on stage this year would have been funded, in 2022 or 2023. So certainly there are deals out there. There's always room for a good idea to get some funding, even if numbers are down. And I think people like to make a lot of noise about what the funding ecosystem looks like when it does have slowdowns or things like that. But ultimately, it's a robust fintech ecosystem. There's a lot of competition out there. And I think that's really healthy. We'll see if it's sustainable. There may be, the pendulum can always swing back the other way. But I'm afraid we're out of time here. This has been a really fun conversation. Kamran, I want to thank you again for joining me. And I wish everybody listening a happy and productive 2025 based on some of Kamran's predictions.
Fantastic. We'll be buying Greg's t-shirts very soon.
That's right. I'll work something out and send it to you.
Awesome.
The Finovate podcast is produced by Informa Connect in association with Provoke.fm Media. Check out Finovate.com for information on Finovate's upcoming shows and to learn how you can get involved. The discount code Finovate Podcast will save you 20% on tickets to all of our events. And you can email us at info@finovate.com for information on sponsoring, speaking, or demoing. Thanks for listening.